Good morning. The session of today will be a very brief presentation for all potential investors who want to do business in Italy. Now we start talking about the tax residence. So a company is resident in Italy for tax purposes if its legal seat or the place of effective management or the main business activity is in Italy for the greater parts of the tax period. It means more than usually 183 days. All the resident companies are taxed in Italy on their worldwide income. The non-resident company will be taxed in Italy only on Italian source income. We can introduce the main direct corporate taxes. The most relevant is the corporate income tax, is IRES, whose rate is 27.5%. For certain activities, for certain business, I'm referring to, especially to the energy industry, the tax rate is higher. 38% is called revenue tax. Always with respect to IRES, there are specific rules for IFRS or IAS adopter. So keep in mind, if you use this specific accounting principle, there are very specific rules for these operators. The second relevant corporate income tax can be considered a local income tax, more precisely a regional tax. It's called IRAP. The literal translation is regional tax on productive activities. And the rate can range from a minimum of 3.9% to a maximum of about 4.8%. Keep in mind, because this is very important in order to understand the whole tax burden of Italian companies, that the taxable basis of the two taxes are different. Now we can also talk about another tax which was introduced in 2012, IMU or IMU is a tax on the real property, and all the property owners are liable for this property tax on all lands and buildings. The rate can vary from a minimum of 0.3% to a maximum of 0.76%. And this tax will be applied to the taxable value of the property. Now we will introduce the value-added tax, so-called in Italy IVA. It is a general tax that applies in principle to all general activities involving the production and distribution of goods and the provision of services. It is a consumption tax. It means that the burden of this tax is borne ultimately by the final consumer, not by the entrepreneurs or the corporation. So it is not definitely a charge on the businesses. How does it work? It is collected fractionally. So basically the entrepreneurs will deduct from the VAT that they have collected the amount of the tax that they have paid to other taxable persons on the purchases for their business activity. The standard rate is 21%, but keep in mind that there is the possibility that the rate will be increased starting from October 2012. There are other rates, reduced rates for certain production of goods or certain provision of services, which are basically 4 and 10%. For certain activities, there are VAT exemptions. I'm referring especially to all financial services, medical services, export and sales, and contribution of assets to a company. Now, explain briefly the taxable basis. With respect to IRES, the taxable income of a resident company for this specific purpose is business income, so which is the net income earned in a financial period, more precisely in the tax period. This profit and loss must be adjusted, this result must be adjusted on the basis of certain rules, but the starting point is represented by the profit and loss of the company. The second corporate income tax, the local income tax, IRAP, is calculated on a different taxable income, a different value, which is represented by the so-called net added value. And now we can briefly explain the concept of net added value. It is basically represented by the value of the production minus some cost of production. Which is really important to be remarked is that certain costs are not relevant. I'm referring to employment cost, excluding social contribution, the extraordinary and financial components. Now, we will explain some important regime that every investor must know if he wants to operate in Italy, if he wants to run a business in Italy. First of all, we need to discuss about the tax losses. The tax losses starting from 2012 can be carried forward without time limitation. But keep in mind that only 80% of the current net income can be set off against prior tax losses. There is a specific exception for this rule, and it applies to the tax losses incurred in the first 3 tax periods. In Italy, there are no change of ownership rules applying to the tax losses carried forward, except when there is a substantial change in the activities. Carryback of tax losses is not allowed. Like other European jurisdictions, in Italy there is a specific participation exemption regime. It means that an important part of dividend and capital gain on share sales will be exempted. More precisely, 95% of dividends and capital gains are exempt. But there are exceptions. In particular, this rule is not applicable to capital gain and dividends deriving from blacklisted jurisdictions. Another important regime is fiscal unity. So in Italy, if you have more corporation, you can consolidate the net income. So it means that you can set off negative and positive taxable incomes. Now it's time to talk about anti-avoidance rules, and these restrictions must be strongly kept in mind because are very relevant. So we have thin capitalization rules. So what does it mean? It means that the interest, the borrowing expenses incurred can be deducted only within a certain limit. There are specific transfer pricing rules, so it means that if there are intercompany transactions, we need to comply with the so-called arm's length principle. There are also CFC rules, and on top of that, there are also very specific anti-avoidance rules concerning certain transactions. But I think that it's very important to remark that in Italy there is a great focus on transaction with blacklisted jurisdictions. So if your company buys, purchase goods or services from suppliers located in blacklisted jurisdictions, you need to put in place certain fulfillment, and you need to be quite cautious. And last but not least, there is also a general principle elaborated by the Italian Tax Supreme Court on the anti-abuse law. So keep in mind that, like in other European, not only European, but also Western, generally speaking, jurisdiction, there is a great focus on anti-avoidance rules. The last part of this session is dedicated to incentive. And if we talk about incentives, you must be aware that as Italy is part of the European Union, there are certain rules to be complied. But if you enjoy specific incentives and these incentives are lower than 200,000 euros over a period of 3 years, there are no limits. But if the amount is higher and these incentives are based on the location and the size of the business, you have to comply with EU rules. The second important point is represented by R&D tax credit. This tax credit is allowed to companies which outsource R&D activities and development activities to research centers, to research bodies recognized by the European Union, to universities, and the amount of this tax credit is quite relevant. The last incentive that we discussed today is the so-called ACE, that can be translated as a support to economic growth. From 2011, resident company and permanent establishment of non-resident company can enjoy this notional interest, which is a further deduction that must be calculated on the increase of the net equity. For the first 3 years, the rate of this notional deduction, of this notional interest, will be 3%. Thanks for the attention.